Austin Smoak, welcome to Acquiring Minds.
Happy to be here. Thanks for having me on the wall.
Austin, you are the new owner of a roofing business in Central Florida, a sizable roofing business doing about $3 million in EBITTA. And this acquisition represents something of a dream come true for you. Going all the way back to high school, you'd developed the notion that buying a business was better than starting one from scratch because you had started one, a landscaping business, and it was really hard. So can we start back then, Austin? Tell me about that experience and what it taught you.
Definitely. So I always had the entrepreneurial spirit. So started a multitude of companies, small scale when I was younger. I'm starting in my teens, picked up a few books in college, starting out with the Harvard Business Review, as well as Reginald F. Lewis's book. They kind of taught me about, lower middle market private equity and how to get in the gate. So actually one of my first sellers meeting when I was 19, there were some juice shops that were in New York City. There was an owner who had 3 for sale. I had no idea how to structure a deal, had no debt or equity relationships, just generally wanted to do this. So, I was 19, fast forward 8 years, and now we're here.
All right. Well, let's go through that history in a little bit more detail. So
Sure.
At 19 years old, you have your first seller meeting. Why? And you're in college, I assume, at the moment. Give me 30 seconds on that.
Yeah, sure. I'll give you a larger scope background. So originally from Atlanta, went to school in New York, went to St. John's University, graduated with a BA in economics there. The reason I had that sellers meeting is I had picked up the Harvard Business Review book, How to Buy a Small Business, which is fantastic for anyone looking to get into the space, especially self-funded. That was one of many, I would say. So that year I probably went on 10 seller meetings, started to learn about the scope of, how to raise financing from banks and things of that nature. When you're 19 with no proven track record, it's really tough. So fast forward from there, after graduating from undergrad, I started my career in investment banking at Goldman Sachs. I was there from 2018 to 2021, working in real estate investment banking. I left Goldman in 21 to pursue a self-funded search, which I launched formally in October of 21. Ended up acquiring my first businesses at the top of 22, which were food and beverage franchises, a small network here in Florida. Went back out to the market looking for a larger deal to do. And that's what brings us to the $3 million EBITTA roofing company, which I closed on roughly 7 months ago.
Okay. And the many deals that you'd looked at when you were young and inexperienced without a track record, you kind of continued with the idea that you would eventually do that, but you took this, side route at getting some years of experience at Goldman sort of thing. What was your thought process after you had all of those seller meetings, but nothing came to fruition?
Yeah, definitely. I mean, if you want to work in private equity or lower middle market private equity, going through investment banking is the primary route. Secondary, you can do management consulting, but, understanding that's why I took the investment banking route for a few years prior to going out myself and acquiring a company.
So the goal, the dream remained the North Star throughout all of that experience. You were really going to Goldman to get some experience to then go out do a search. I mean, it was really kind of years in the making, your search.
I wouldn't say it was that crystal clear, but it was always in the back of my mind to do this.
Okay. And when you told me about your experience at Goldman on our pre-call, it kind of struck me what you said you really took away from those years. Can you share that with us now?
Sure. It was how to work in a fast-paced culture, how to be productive, what work ethic actually looks like when you're spending, anywhere from 12 to 16 hours on the desk daily, and you have to focus on the intricacies of everything. If you're looking at a model for 8 hours, or a multitude of models for 8 hours, everything has to be right. So it just taught me how to work. I always had a strong work ethic, but, from a culture standpoint, Goldman was a fantastic resource for me just on how to be a professional and how to work.
Mm-hmm. So it's not just working hard, which you already knew how to do, but working hard for extremely long periods of time while the stakes remain high throughout and the quality of work really can't dip.
Agreed. That's a great way to put it.
Yeah. Okay. All right. So you get out of Goldman, you start your self-funded search in earnest, but you have these franchise opportunities come your way. Pick up the story from there, please.
Sure. They were really a godsend. So, a friend of the family was looking to close out his father's estate, and they were looking to, sell these last few franchises out of their portfolio. He's looking to move quickly. I bought those at less than 1x EBITDA. It's, a few franchises in the food and beverage space down in Florida. They help fund essentially my search period.
Okay. And can you tell us any more about those businesses? You said there are a few franchises. How many, what they are? Just give us a picture.
Sure. So they're all located in Florida, underneath the Focus brands, which are Auntie Anne's. I own a Subway as well. Focus Brands has a lot of brands, so Cinnabon, et cetera. So those were acquired in February of 22.
So these two franchises, you got them for 1x, less than 1x EBITDA, and together they helped fund your search. Where were you when this happened? Were you still up in New York? Because you said they're in Florida. Are you having to go down to where they are? What does the operational management of these look like?
Sure. So I actually worked in investment banking in Dallas, and then moved to Chicago from Dallas. So when I purchased these, I was still in Chicago, and I did the search full time from Chicago. So a manager was in place. He had been there for 8 years at the franchises. He handles day-to-day operations for me. I don't do anything, pretty intensive within that business. So they're pretty much passive assets for me.
Now, let's just understand that a little bit better, because while you ultimately bought a $3 million roofing business, some people will really be intrigued by just the acquisition of these two businesses, which are, as you just said, passive, a word that I try to avoid. But if that's what they are, that's what they are in your case.
Yep.
Can you give me a sense of how much the SDE of each of them is, just so we have a sense of size? Could these support you if you kind of just wanted to stop there?
Definitely. Altogether, the SDE I would call roughly 150,000. I actually wanted to scale the franchise portfolio to 10 units, but with working with franchisors, there's a lot of red tape. So I was able to get really good deals under contract within the brands that I own, but the actual franchisor was the mediating factor in between that. So I was able to get them financed and get them under contract. It was just the franchisor said, "Hey, we want to see, a multitude of years of experience underneath your belt prior to you, taking down 10 units in a market." So,
oh, fascinating. Well, I didn't actually get that from our pre-call, Austin. So because one of the things when I've had acquisition entrepreneurs on who have acquired into franchises is, getting inside a big franchise can be difficult because typically franchisees are selling to each other. But here you got these two through this kind of unusual backdoor, if you will, and that gave you the toehold, and you tried to take advantage of that. You went into the franchise network trying to acquire more, and you had a deal to do 10 units, and so the franchisor said no because you didn't have the experience. That must have been frustrating. I mean, yeah.
It really was. So I think I had a really good deal under contract. It was 8 units, roughly 700,000 or so in EBITDA. Purchase price was, I think, 1.75. So it was a fantastic deal. They had management in place. It was kind of a plug and play situation. But franchisor ultimately just said no, and I won't speak negatively towards those brands, but some are better than others. It's more so all about relationships, and it takes time to build that relationship base. Well,
that's a really good reminder, because the people that I have featured, the guests that I have had on who have bought into franchise systems, it's gone their way, which is why they're guests on the pod. But that we always acknowledge that there is this big risk in terms of you've got the risk of yourself, you've got the risk of the business, and then in a franchising situation, you've got the risk of the franchisor, and you're at its whim. And that introduces a whole other element of risk that independent businesses don't have. And again, my guests who have been on, that hasn't been a problem for them. But so you're it was, but it really was a problem for you. This is a good example of how a franchisor, really represents risk because they just said no to what you wanted to do. So, all right. But meanwhile, you still got these two businesses and they're throwing off $150,000 a year, which is a full salary, and they're basically passive. That alone is pretty amazing. And I recall from the pre-call you saying, like, if you weren't convinced that buying a business was the way to go with your life before, you sure were then. Does that capture it?
That's right. Yeah, definitely.
Cool. Okay. So you're up in Chicago, you've got 150,000 coming in, and you want to go and find more businesses. So tell us about your search from there.
Sure. So while I was in corporate, I was actually looking passively for a year. So I built out a Rolodex of brokers, lenders, equity investors, my CPA, legal team, et cetera. So all that was built out prior to launching the search formally. Funny enough, I found the business on BizBuySell, and it's a pretty sizable business. So I would always say, I know there's a lot of chatter about how, good or bad BizBuySell is, but it can still be a pretty good resource, and you can find some gems. But everything I did was brokered, I was on Axial, things of that nature, and really got on the local markets that I was trying to attack, got on their local broker list, which is pretty much the most feasible way to get good deals.
So you're in Chicago, you've got the two franchises. Give us a picture of what that search looked like.
That's right. So the larger search was already there. The franchises came within the first 4 to 5 months of me launching my search. So throughout that period, I'd been bidding on deals, on a monthly basis. So at that point, when I closed on the franchises, we were probably 5 months in full time. I got the deal that I actually closed on in late 22 under contract in May of that year. So we closed on it in November. So it was a 7-month process for diligence and paperwork. It was very arduous. So that's the scope of it.
Okay. And as I recall, you had been looking in particular geographies, like you had geographies you liked. What were those and why? Was it basically just kind of their strong economies, high growth? What were the geographies and why?
It was more so where I felt comfortable moving. So Georgia, Florida, Texas, Chicago, and Southern California.
Cool. Okay. All right. And so your searches in these geographies is you're open to BizBuySell, as everybody should be, and you're doing Axial, and you're also reaching out directly to brokers in these geographies and cultivating broker deal flow from in all those places.
That's right. And you're going to get the best deal flow from the local brokers. They know, smaller business owners who are looking to sell. They're serious about it. A lot of people focus on proprietary data, deal flow, or, data. I always thought that it's already being done by the broker. That's their job, essentially. They're doing outbound daily, and they've been doing it for years. So they're going to find the deal. They're going to list it. You're wasting a good chunk of time, doing proprietary.
Yep. I hear that. Okay, Austin. So tell us about the roofing business that you find.
It came from BizBuySell, a local broker in Florida. It was marketed at, 2.25 in EBITDA, fair purchase price. It's in Central Florida, about an hour north of Orlando, strictly residential roofing. Does about $8 million on top line and $3 million in EBITDA. Mom and pop shop, founder centric, husband and wife worked within the business full time, 60 to 70 hours a week. I took it over in November, as I referenced previously.
So it was 2.25x is what it was being sold for? 2.25?
No, that's what it was marketed. The EBITDA was marketed as, which was 21 EBITDA. 2022 EBITDA is what reached $3 million.
So it grew whatever that is, $750,000 over. So that's like 30% growth over the course of the year that while this 7-month negotiation is going on. And what was the multiple?
When it was first marketed, it was 3.5x. At closing, it was, what was it? 2.5, 2.75, somewhere around there.
That's pretty remarkable that so as the revenue, as the EBITDA is growing over the course of the 7 months that you're negotiating this, they're not trying to push you for a higher valuation? So because basically the multiple just comes down if you get more EBITDA for the same price.
No, I think they've been burned by some other buyers previously, and they were, exhausted with the process. So going back to the negotiating table wasn't what they were looking for. They were looking for someone who was going to come aboard and actually care for their company, which is something I've, really done since acquisition and something I exuded throughout that, deal searching process.
Yeah. Well, understanding that, hearing that they were a little bit fatigued from talking to buyers and the disappointments that come from trying to transact, it still strikes me as a low multiple for a business doing that much EBITDA. At least what we often hear is that, certainly a business doing $2 million in EBITDA or above, often $1 million in EBITDA or above, can attract the attention of bigger players, not a self-funded searcher, but like private equity or a smaller private equity shop or a traditional search funder. So, do you think that those were some of the folks they had talked to previously, people like that? And why weren't you having to compete with private equity to buy a business doing $2 million in EBITDA? I mean, that's big for a self-funded searcher.
So from my understanding, most of the buyers that they were looking at were more so search fund oriented. So, your mid 30s to 40s guys who were looking to purchase a company and operate it themselves. And from my understanding of what they told me is who they were dealing with mostly. They didn't speak with many, private equity firms that were, strategics within the market per se. I don't know why. It just didn't happen that way.
Okay. Well, Austin, people are going to hear this and be like, and probably my headline will be something to the effect of, how does a self-funded searcher buy a $2.25 million, and then ultimately when you closed $3 million EBITDA business, which by the way was on BizBuySell. I mean, this wasn't even found via proprietary. And I'm starting to feel like it was just chance. It was literally just sitting out there for anybody to find.
You have to get lucky. Everybody wants to put strategy behind things. For me, it was God and luck, same thing with the franchises as well. You have to put the effort in, you have to put the reps in, but it's a numbers game at the end of the day, finding a really good asset and finding a good, seller group. So it's purely numbers and luck as well.
And I didn't ask, what was your criteria? I mean, I assume you weren't, your bar wasn't that high that you were only looking for 2 million and above. I assume you were probably willing to buy something much smaller.
No, I did buy much smaller, starting off. So
right.
When I went back out to the market, I would say $1 million in operating profit within those geographic areas that I referenced previously, and something I felt that I could take over a management role in.
And what do you mean by that? Why do you emphasize I felt that I could take over?
Something, you have to fit, the role. I think some businesses are better for certain people, some aren't, so you have to find something that's going to fit you culturally, that you're going to step into the seat and be able to thrive with.
And why did this particular business have that business buyer fit?
It was very lean. That's one thing. There weren't a ton of dependencies and things of that nature and processes in place that were going to be too arduous for me to take over from an ownership standpoint. I would say those are the primary and key things.
That's funny, Austin, because that's a little counterintuitive to me. What I'm hearing is no management layer, lots of mess, just mom and pop mess. And while that probably, that's great opportunity for you to go in and professionalize, it's also like that much more intimidating because it's that much more for you to go in and figure out. But it sounds like you actually, that was a plus, not a negative.
Yeah, sure. Definitely. What I meant by that, it was a very simplistic business model. So
okay.
I actually hired a GM to handle day-to-day operations for me. I knew kind of an operating capacity was going to be tough if I wanted to do everything by myself, but the business model itself was very simplistic. So it was delegating a few tasks for, G&A that I was going to hire. So it wasn't that, hey, Austin's going to be able to do everything that, the husband and wife do to have been running the business fantastically for a decade plus. These processes are very simple and you can hire people to do these relatively quickly.
Okay. That's a great clarification. And so hiring the GM, let's get into that a little bit because that's also another topic that is of great interest to anybody exploring this path. What was your playbook there? You wanted to hire a GM from day one or operate yourself for a while and figure it out and then hire a GM or what?
From day one, I always wanted to hire an operator. I was a banking guy. I didn't want to step into the seat of roofing owner and have to do everything from day one and have to depend on my expertise to lead that company. There's a lot of risks within that. So, prior to acquisition, I was looking at, potential GM candidates for roughly 3 months. I found this one through a family office, who was looking to be my sole equity investor at one point. They actually left the deal 2.5 weeks before closing. So that's another sticky story we can get into.
Oh, but they did give you your GM.
They ran the search for me, so they put it out on their HR platforms. So source candidates.
Well, before we can hear about how that fell apart, or their funding of your as your sole investor fell apart. But I just want to understand a little bit more about this GM process. So, because I had another guest on recently who bought a towing business in North Carolina, and he also, as he's doing his deal, is recruiting an operator to put in from day one. And I was kind of staggered by this because it's the conventional wisdom, at least down here. Maybe private equity people would say something else, but down here, in the really kind of acquisition entrepreneurship land, self-funded land, it's don't think that you can hire an operator from day one and kind of passively.
That's very true. I totally agree with that. You can't be passive. You can't just put the guy there and expect him to do everything for you. So I was in the business 17 hours a day the first 3 months. So developing the transition plans, giving him daily tasks of what needs to be done, delegating what his tasks were going to be. So I was present within the business daily as the owner. But when it comes to operations kind of post that transition period, they're a lot more seamless. It's scheduling, planning, having a focal point that, your employee base can go to ask questions.
And right. That's a great clarification.
So, as you look to scale, you can't scale without infrastructure. Now, I've always had it in my mind that, hey, I need to be able to do that task, but I need to be able to repeat this elsewhere with other companies. So that was more so the idea.
So when you say you want to repeat this elsewhere for other companies, I'm getting a little bit ahead here, but you have a vision of doing this repeatedly over the course of your career.
Agreed. So with Grow Oaks Capital, I'm looking to scale within this market via rollup. Generally, anywhere between 7 to 10 million in EBITDA is what I've kind of put the idea as. And then from there, more of an independent sponsor model within lower middle market, private equity in general.
Okay. So you had said that the husband and wife were running this business. So it was basically you were going to have to replace 2 full-time people, right? Okay. And did you anticipate that would be your GM, the two of you and your GM that we're already talking about? Or does the husband and wife map to that? Or is it?
So I'll break down responsibilities. So the wife was CFO, lead administrative personnel. She wore 4 hats. The husband wore 4 to 5 hats as well. He was, scheduling, purchasing, management of the crews, pretty much anything outside the office. And the wife handled pretty much anything inside the office. So when I was taking over the business, there was a lot of G&A, that was going to come into play. So I hired additional administrative staff, the GM, you got myself to account for, as well as additional support staff within our warehouse. Oh, and I forgot the previous owner did sales as well. So yeah, I had to hire another sales guy. So
what do you anticipate? You just touched on it, eventually going independent sponsor, but just your kind of more immediate next 12 months, next 24 months, your plan for growing this business or potentially, organically or inorganically. What's your plan here?
Yeah, hyper focused on scaling through acquisition. So theoretically, the goal is to get 4 entities within the roofing space around that 7 to 10 million in EBITDA threshold, all within the residential roofing sector within Florida.
So you're looking to do 3 or 4 more acquisitions to get you to 7 to 10?
2 to 3 more acquisitions for a culmination of 3 to 4 companies.
Okay. That gets you to 7 to 10 in EBITDA.
That's right.
Okay. And then envisioning exiting or holding on to it, or you just have so much optionality at that point, you'll just do whatever. It makes sense.
We'll see at that point. I got to get there. It's an arduous task just to do one. So, we'll see when I get, when that happens.
Okay. Well, let's talk about, I want to hear we're a little compressed on time today, but I want to hear about the roofing business because it is an industry that a lot of searchers look at. You'll see a lot of roofing businesses on BizBuySell, at least I have. But before we do that, I've heard you say the word arduous more than once now. So it was an arduous acquisition, and it's been arduous since you got there, 17-hour days. Let's just quickly, I know we're stepping back a little bit, but the actual transaction, is there anything you want to highlight there that as to why it took 7 months, why it was arduous? Is there anything that we can learn from your experience of the transaction?
Yeah. Of course, me being your first time buyer, everything wasn't, 1, 2, 3 for me. It was learning through the fog. I had a good diligence firm in place for, financial. I had a good lawyer to do legal diligence and prepare docs. Licensing is another thing that you have to work through in the state. So that takes time. Also rupture my Achilles throughout that process. It was raising capital, for the first time was also a large task. It's a multitude of things that go into the process of doing a deal, and actually getting to closing date. So it's really tough to get to closing date, especially on your first one.
So it wasn't necessarily that anything went terribly wrong. It's just there's so many moving pieces to this, and kind of
that's correct.
It
takes
them all
time.
And lining it all up.
It takes time unless you're, a private equity firm with dry powder, or somebody who has the cash to do the deal. It takes time.
Yeah. And then the 17-hour days. So since you've gotten into the business, even though you had this GM to come and actually handle the operations, to be the one in the business, and you're basically working on the business, it sounds like, from day one, it's still, you're doing so 17 hours every day. So give us a picture of what your life looks like. Why are you working so hard? Somebody completely naive from the outside would say, what do you mean, man? You hired a GM. What are you doing all day? Disabuse everybody of that notion. What does your day look like?
Sure. So in the roofing industry, they start really early. So 6 a.m. is when the warehouse opens. Crews come in to get the materials, or our warehouse guys are structuring the materials to take stuff out. Days are long as well. It's till sundown. So that could be, 7, 8 o'clock at night. The first, 2 to 3 months, it was transitioning of accounts. I think I had like 50 new inventory, meeting suppliers, building those relationships. A multitude of things that you're learning just from a process standpoint, and also delegating those processes. Like, this is going to be your new responsibility. I also implemented a software, and that took time as well. So everything prior to me coming aboard was carbon copy on paper in a Word doc, or somewhere in Excel, or, just on a physical sheet of paper. So I implemented processes around, how we're going to order materials, how we bid through technology, how we receive payment through technology, all of those things. I implemented a software for that, which was a tough task as well. Like, that takes time. And just learning the industry, setting up new accounts, managing employee relationships. It's a lot. It takes a lot. It's not just cut and dry. So, it was a multitude of those things. And also just trying to show good faith to the employee base that, hey, I'm here, to be around. It's not, I'm just gonna be here and not be here. It's up to me. So.
It sounds like you were confident in getting in there and making changes pretty early on, because, it's only been a few months. Yeah. So what was your philosophy on that?
I felt it out, so originally I wasn't going to implement the software until, after 6 months. But, the employee base is very lean, and, you can rub shoulders with everybody and see, like, hey, it's going to be okay for you. And like, some employees are like, hey, I already use this in other companies, so I know how to use it. Or You have some that shy away from it, but it's more so filling out the employee base to see if they're okay with it. Transition that quickly.
I like that. I often ask about the change management, when and how much change that the acquisition entrepreneur feels comfortable doing. And there shouldn't be a hard and fast answer to that. It depends very much on the organization. So the answer is feel it out, which is what you did. And if there's receptivity to it, go for it, I guess.
That's right.
Austin, any more you want to say about your particular experience buying the business before we just talk about the roofing biz?
I would say I bought from a great ownership group. They were fantastic to work throughout the transition period. Bought in a great market. It isn't an exact science, when it comes to these things. It's what are you going to feel comfortable with, day one? How are you going to manage those expectations, and what's your, buffer in between that?
Mm-hmm. Okay. Actually, I was going to circle back on this and forgot to. What happened with the family office that was going to be your sole investor, and how did you then find capital to do the deal when they backed out?
Yeah, so I used an equity syndicate to help raise capital. They got about 70% of the capital for me, or made the introductions to people who had the capital. So I had two different avenues. I was, at a small LP base who were going to write $25,000 to $50,000 checks, and I had, the family office route, who were going to take a larger chunk of equity, but be the sole equity. So, with that, I was about to let all my smaller LPs know that, okay, I'm going with this family office and they're going to be, the sole provider of the equity. And literally that day they called me and said, hey, we can't do it. So I was playing both sides, the smaller LP base and the family office route. With the smaller LPs, I was able to, get 70% of the check that was needed. And then from personal relationships, that I was able to foster, I got the other 30%.
Mm-hmm. And it sounds like you would have preferred the family office. And is that just because the logistics are easier when you have a sole investor versus multiple? Well, to help educate people on the pros and cons there.
I think there are pros and cons. It depends on the family office that you're working with. Some of them have, great back office support from HR, payroll, things of that nature that can be extremely beneficial for you to lean on. It just depends on which family office and how aggressive they're going to be with, writing checks for you as well. I think the better route happened, the smaller LP base, I have a myriad of LPs and they're all, unique in their own right. They're CEOs, operators, investors. I can lean on them for a lot of expertise or help if I need it. So, there's pros and cons to both sides. It's just kind of depends on what you can get.
All right. To close us out here, Austin, tell us about the roofing business. You said this is a residential business. Yours is residentially focused, but so there's residential, there's commercial. That much I know. But take it from there. Kind of give us the 30,000 foot view of the roofing business, please.
Sure. So I'll give you the scope of my business. I wouldn't say I'm an expert within the roofing industry by any regard, but we have a small residential roofing company that does repairs and replacements for homeowners within Florida. Within that, you have a multitude of types of roof companies in the residential space. You have organizations that are primarily sales driven and sub out all their work. You have what I call your more organic companies that are market driven, and they have W-2 employees that actually service their clients, which is more so what we are. And that's kind of primarily what's driven within my market for residential roofers. And you have your commercial guys who handle commercial properties from a service standpoint. So, repairs and replacements on those, and then your new construction roofing companies as well, which is a low margin business in my opinion.
Okay. So of those kind of four, within residential, you have, your own crews, which is what your situation is, your own W-2 crews. And then you also have within residential, kind of sales organizations that sub out the jobs. And then you have commercial roofers, and then you have roofers focused on new construction. What are do you feel like where you play is of those four buckets? Is it kind of one of the more attractive, would you say? Or what are the pros and cons of your model and where you play?
It's a higher margin business on the residential side, especially on the repair business. I would say, there's give and take. On the commercial side, you have a repeated customer base. On the residential side, it's typically, one-offs, unless it's repairs. So, but if you're doing a repair, they don't want you coming back next week to do the same repair. So, there's really no recurring revenue base. It's all purely driven off of brand and word of mouth, I would say, within my market. So there's pros and cons to each scenario. Residential is definitely a lot more high margin. But commercial can be, it may have a stickier revenue base.
Okay. Well, to the point about where you play in residential not being recurring, what I have also heard about the roofing business in places like Colorado, where there's hail damage all the time, is that it's this cutthroat, very aggressive, kind of hard selling business and really competitive. The roofing guys are really competitive amongst each other. But it's also very seasonal in Colorado because of the hail. I assume it's probably seasonal everywhere. It's like when there's some sort of weather that causes roof damage, that's when roofing companies get busy. But anyway, just to the point about how competitive the industry is, what does that look like for a roofing business in Central Florida?
Yeah, definitely. I would say it's all weather dependent. Florida, the state for tropical storms, so it makes it a fantastic market for the roofing industry in general. Colorado is another one of those markets where there's a lot of storm related work. So I would say when it comes to the competitive nature of it, of course, any business is competitive, but the way to distinguish yourself, well, let me backtrack actually. So the market is very fragmented. So within each county, there are, 2 to 3 roofers that kind of own that county within Florida. There aren't any large companies that own the state when it comes to roofing. So there's competition definitely, but there's brand awareness within your market, and that's what you want to hone in on.
Mm-hmm. And so how does your brand stand up in your market?
Oh, it's fantastic. I mean, the previous owners, they built a fantastic brand and company. Something we're just trying to steward and continue to guide forward.
Mm-hmm. And do you, for landing jobs, so you have this brand equity, so hopefully people just know the name and seek you out and do direct searches. Hopefully people are just Googling that and calling you. But I imagine just roofing company near me is also, you're kind of just trying to generate online leads from people who don't yet know the brand. How much of your lead generation looks like that? Like, to give us a sense of how you keep the phones ringing.
Yeah, definitely. It's so prior to me taking over, there was no marketing presence. There was no SEO spend, no Google ad spend, no none of that.
You're kidding. So it was just the strength of the brand that was making the phone ring?
Correct.
That's awesome. Wow.
So after I took over, I implemented those marketing strategies around SEO and Google ads, Facebook ads, LSA ads, guaranteed ads, those things. And also more like Nextdoor, things of that nature. So multitude of platforms online that I went to, to market. But that's not what drives my consumer base. It's brand. It's the authenticity of and workmanship of what the company has done for the last 20 years.
Mm-hmm. Okay. Well, but certainly I imagine adding all of these marketing channels in has moved the needle. Have you felt a revenue move north significantly because of it, or is it not even really noticeable?
You do see some uptick, but that's not where our customer base is. It's not where the multitude of it's coming from.
Okay. So you would caution somebody who's looking at a home services business to buy that has not been savvy about online marketing. You would caution that buyer, just because the business you're looking at hasn't been doing digital marketing. Don't think that you can start doing digital marketing and all of a sudden blow up, like transform the business for the better. It's not necessarily going to.
I don't know. I think it depends on how much you're going to spend on marketing as well. I'm still conservative. I still have to keep, fine tune, approach when it comes to profitability and, where our expenses are actually going. So, I mean, I definitely increased our marketing budget, drastically, but it's not a significant portion of revenue. Put it that way.
Okay. Austin, I want to ask a few more questions, a couple more questions to close out here. You've seen kind of search and buying businesses from a bunch of different angles. You have these relatively small but passive franchise businesses. Then you do a self-funded search and you buy this, for self-funded searchers, for my audience, a quite large business, $3 million in EBITDA. And now you've got a roll-up vision. So you're also thinking about things from a roll-up perspective. And then in the slightly more distant future, independent sponsorship. What would you tell people from all of that kind of like swirl of ways to approach buying a business, to take away from how, what you think the best opportunity is?
And I think it depends on your personality and what you want to get out of the experience. Some people really want to be operators, some people more so want passive assets. It's a give and take. I think both are great. It just depends on what you want from your experience. I think there are certain routes that are different, traditional search versus self-funded search versus, independent sponsor model. Those are different vehicles, but when it comes to small scale business, things that are sub 5 million in enterprise value, it should be more so, how do you see yourself fitting within that organization, and how involved do you want to be? Things of that nature. You really need to dig, inside to understand that from, your operating capacity.
Mm-hmm. And what is Austin optimizing for? Like when you considered the range of options, what did you decide you wanted to optimize for in your own life and professional path?
For me, it was always passive. I'm not. As we alluded to when we first started the interview, I saw how tough building, businesses from scratch were. So I have a great deal of respect for founders and sellers of these businesses. So when it comes to the operating capacity of businesses, it's a great task. I learned a skill set around, deal structuring, things of that nature from, my experience, and helped me. That's what I feel I'm good at. So it's I would say you can pull it from there.
Okay. But at the same time, you are spending 17 hours a day in the business and doing a lot in the business. You're not managing the crews and managing the people, but you are doing things to gain operational leverage. So it's not like you're arm's length here at all.
That's right. That's very true. And that's because I want to make sure we're successful. And I couldn't let the company just go abyss without me giving all my effort towards, the entity.
How much longer do you think you'll be working 17-hour days? I mean, I just really want to have
that stopped after, I would say, the first 3 months.
Oh, great. Okay. And so how much are you working now?
Anywhere from 20 to 40 hours a week. Depends on the week.
Oh, well, that sounds a lot better. All of a sudden, your life seems easy, Austin. Bursts of energy followed by
not easy, but
okay. All right. Well, we can call it there, Austin. I know you got a hard stop in 2 minutes. So tell people who want to reach out to you what the best way to do so would be.
Sure. Feel free to find me on LinkedIn, or you can go to my business website and shoot me an email there directly.
Yeah. What's your business URL?
GroveOaksCapital.com.
GroveOaksCapital.com. Austin Smoak, thank you very much for the time, sir. Very interesting story. That people are going to be so eager to understand how they can buy a business with $3 million of EBIDTA. So congratulations on that. And we'll have to have you back and see how things are going in a year or so.
Thank you so much for having me.
All right, Austin. Thanks. I hope you enjoyed that interview. Make sure you subscribe to the Acquiring Minds channel below. We are now publishing twice a week. So tons of new interviews and stories to come. Stories that will help you along your own path to acquiring a business.